there's a lot of that goes into really maximize the value of someone's company beyond just, throwing out a number. We get a lot of sellers that will come to us and say, we've got this thing that we can add back, and we're gonna say it's really not market. We can't, but we're gonna show them what good looks like, how we can get their company looking good and presenting it the best way possible.
The reality is no business is valued the same way. There are really two key inputs that drive a multiple, right? It's all about risk. It's all about growth. Yeah, just a little bit more on the family office side of it, just for the sake of providing definitions. A lot of folks out there may not necessarily understand what a family office is. With the emergence of wealth in our country, specifically here, family offices, they're pools of funds, right? Usually, if a family, they have a liquidity event, they now have a significant pool of wealth to deploy, not just for now, but for multiple generations in the future. And they very much act like private equity in terms of how they invest into companies. But again, the one key difference here is they're long-term thinkers, because what they're looking for are good businesses that they could run and operate for multiple generations. And again, going back to the comments in car washing, value creation in car washing, given capital intensity and operational intensity of the business, it takes more than 3 to 5 years to fully realize that benefit. So there tends to be that better alignment and that fit with just the aspect of timeline and their investment time horizon. What I personally love about the family office model, though, is there's some really unique family offices out there, and you could find that proverbial 1 and 1 makes 3, right? So in other words, let's say this family office had a liquidity event within software and technology. And let's say you're an independent operator and technology enablement's been one thing that's lacking in your business. Well, you find yourself that right capital partner to help you go grow. Not only are they bringing you the capital, but it's smart money, right? They could help thinking about transitioning and transforming your business. It's not to say that private equity doesn't do this. There's some great firms out there that could think about kind of the back end support of your business and how they could help transform your business to be more institutional in nature. But you can find some really remarkable family offices out there. And I think that's one area where we're particularly excited about what the future looks like in car wash M&A.
One question, I get asked a lot is, is the time right now for me to sell, or what does next year look like? And I'm going to tell you, it's almost impossible to answer that question, right? At the end of the day, my advice to anybody is you got to decide where you're at in your life cycle, because a year from now, could we see that M&A dry up? It could. Right now, depends on where we're at in the global economy, right? So if all of a sudden the war persists on and consumer gets stretched, and all of a sudden we see a little bit of distress in the consumer affecting the operations side of a business, could that cause reason for pause? Sure. Could we see another, potential take 5, or, anything's possible. What we don't know is we don't know how to read these tea leaves of saying what happens a year from now. And so on the flip side of it, the economy could be roaring back. We could have inflation could stabilize and even start going down. We could see interest rates possibly go down. And all of a sudden, we're seeing a little bit bigger lift. What we won't ever see is we'll never see ever going back to where it was in the early 20s, 21, 22, because interest rates were 0. And that's just not going to happen. I think where we're at today, as far as multiples in the world, I think we're probably as good as we're going to get. So the question is, do you hold for a year and wait until your numbers improve and you got a better story to tell? That's up for debate here, because the question becomes is, let's say the market gets really, really has some really distress in the marketplace. Are you okay with holding that and running that company for the next 3, 4, 5 years until a window opens up to sell again? And if that's the case and you got a good company, maybe it doesn't matter. But if you're looking at it and saying, you know what, you're in your late 60s, you're looking at the world differently and saying, I got to tell you, if I leave 4 or 5 million on the table today, I'd rather leave 4 or 5 million on the table today than risk not having an exit a year from now. And so you've got to make what's best decision for you personally, But I got to tell you, I'd remove that greed factor of saying I need to get the last 10% to make that decision, because that's really that's a poor way to make that decision.
That is some of the best advice, Jeff, I've ever heard. Right? We hear that all the time. Like, you're right. You have to boil it down to what makes sense for you based on your needs, for your family, and where you're at in your life cycle and your journey. I think I've seen some very successful people in the world of finance and capital markets lose their job trying to make bets on the macro environment. Right? I don't think anybody had a war with Iran in their 2026 bingo card. You cannot sit there and make decisions for your wealth and your family based on forecasting macro events or where interest rates goes, what happens to the consumer. You 100% have to march to the beat of your own drum, and it's based solely on what makes sense for you. And I think that's fantastic advice, because a lot of groups could go out there, you could sit there and you can make assumptions, or like, hey, let's wait to see if multiples expand here in Q4. We're expecting rates to come down. Guys, that's BS. You're taking more risk than you need there. It all depends on what makes the most sense for you in that situation.
The other piece that they need to put in the equation is sort of a math thing. So saying you're going to, if you sold today, it doesn't mean you're not. So you're going to get a capital out of the deal, right? So you're going to have a fairly good amount of cash to reinvest somewhere. So that money that you're leaving in the company might grow a little bit over the next year or two, with risk of not being able to exit, or you controlling your own destiny of having that money today. And again, there's a lot of alternative ways to invest your money than just buying real estate and car washes. So if at some point in the near future you feel you'll need to be getting out, we should have that conversation. There's a lot of good wealth advisors and other people, but there is a compound effect of having that money available. There's also a lot of there's a lot of other investments beyond car washing. And we're not saying car washing is a bad investment. The only thing I'm saying is that if you're looking at it and saying that the exit is going to be in your inevitable future, you need to take all this in consideration on a long-term basis. If you've got high-performing car washes and you're in a good region and you've got a solid brand, there may be no better business to stay in and continue to operate and run it. This is mainly if sometime in the near future you're considering an exit, you may want to have these conversations sooner than later.
Yeah, that's a good point. We hear it all the time. A lot of individuals in this business, their car washing is all they know, right? It's been their blood, sweat, and tears for a number of years, and the prospects of doing something outside car washing is often foreign and scary. I'll tell you, it's a big world out there, and there are a lot of opportunities. I mean, we see some guys, Jeff, that have successfully exited out of car washing, and today they're doing multifamily development. Some have moved into kind of different aspects of technology and software with an AI component. Like, there's just a lot of interesting stuff out there. And again, always happy to have conversations with you on some of the new ideas that we're seeing. Because that is a really good point here. As you're thinking about selling and potentially exiting the business and liquidating, understanding how to make that money work for you is important, but also understanding what that next stage of your life looks like and what that journey looks like. Some embrace philanthropy. I mean, that's definitely a good point, kind of prepping yourself on the emotional side of it.
One thing we may want to talk through a little bit is, where do we see long-term this space going? Like, who wins? How do they win? What does winning look like even at this point? And I'm curious what you think on that topic.
Yeah, what does winning look like? That's an interesting one. To me, and I know we say this a lot, Jeff. I'm still convinced that the group that wins at the end of the day is best regional operator will continue to outperform. I don't think there's as much weight as having a big national brand as many groups think. So I think having kind of hyper-focused density in attractive markets is definitely the way to go in terms of that recipe going forward. And I think you're going to start to see a lot of that backfilling and of kind of geographical footprints come to play here as we think about car wash M&A in the future. But at the end of the day, it's whoever could deliver exceptional customer service, good brand, good way to engage and interact with your customers. And I think one thing that personally excites me about this industry is it's been independent, highly fragmented. We're now starting to see technology come to play in a very interesting way in the car wash sector. And a lot of it's not just centered around kind of what's going on in the tunnel. It's all the magical stuff that happens outside the tunnel with that customer, right? So I think the groups that are thinking a little bit more about tech enablement in terms of how does that manifest in their business and their operation, and how does that deliver exceptional customer service, those will be the groups that win in the long run. You know, to me, I think the question mark is what disrupts this business. And you and I have had a lot of conversations personally about automation and autonomous vehicles and robotics and what that means for this sector. And I think that's always where these conversations get interesting is, you know, what is autonomous vehicles? How does that reshape this business? Or think about robotics, right? We've seen a couple of groups here try to crack that code. And I think we're starting to see some really interesting technologies in robotics that could be used in the tunnel. So that's to me where I start to really think long and hard about, you know, we have car washing today, but what does car washing tomorrow look like? And with the wave of Internet of Things, artificial intelligence, autonomous vehicles, I think it's safe to say that it's going to look different. We don't know what it's going to look like, but it's certainly different than what we're seeing today.
Yeah, if I'm betting, man, I would venture to say we will see a 1,000 car wash chain in the next 36 months. And we're seeing, I would say there's a few groups already that are sort of forging their path forward. When you look at the clubs of the world, the quick quacks of the world, they've got a fully integrated everything. They've got their own, subs on, they've got their own GCs, they've got their operating infrastructure. They got marketing teams. They're so dialed in and looking to build a brand market by market. And, I wouldn't be surprised to see them guys, somebody go and have a national brand of, I would say it starts at 1,000. Could it get bigger? Sure. At the end of the day, I think if you can build a car wash efficiently and really run that membership model properly, it becomes very attractive. I think those guys end up, becoming real winners. But then you got, on the flip side of it, you've got, groups like, Spotless Brands, Cobblestone, which is, you got Dale Car Washes, the Misters, who have a little more diverse product offering. And I think the consumer has still got an appetite, for a flex offering, for a full service car wash, a detail service. So I think there's going to be an opportunity for car washes that differentiate and give a really high quality product to their customers. I think that there's a real winner. And then, like you say, there's certain markets of the country where you'll never outrun the great regional operators. And again, you got just examples of crew car wash in Indianapolis or Metro, in that Boise and Washington markets. I mean, these guys are just good at everything. Hard to ever think that they can be displaced unless they choose to. But they're just, there's going to be real winners on the regional side. I think there's going to be national, but I do think the days of paying and or getting rewarded for being average or below average, I would say, is over. And I think those guys are going to get wiped out.
No, great. I think that's a consistent theme that we've been talking about here is the discipline, right? There's no more paying up for speculative growth, right? You have to have a track record. You're not getting as much credit today on projections or run rate numbers. You have to be able to show something that's tangible, right, to get credit for it. And I think too, that because we talk about, you mentioned club, you also mentioned kind of capex earlier on too. And I think that's one big lesson learned by a lot of these groups is what it takes to successfully integrate an acquisition. And I think the capex side of it too is one thing that's significantly more important today than it was in the past. All of what this business does, it all centers around that tunnel, right? And deferring maintenance, and the more you kick the can, the harder it is to bring those facilities back to standard. And I think that's one area where groups have a much more of a fine eye today, is understanding kind of the tunnel itself, how to integrate. But more importantly, what they don't want to do is find themselves the portfolio of different car wash tunnels with different equipment providers all over the place. So that's one interesting thing is we see some of these groups like the quick quacks, like the clubs. That's one area where they're very, very particular, right? Which is equipment, more importantly, what it's going to take to get this facility to the standard of a club car wash or a quick quack car wash. And I think that's been one interesting dynamic that's kind of played out here over the last two years or so.
So the advantage they have is they know what good looks like. More importantly, they know how to get to good, right? So it's easy. So you recently did a presentation at Southwest Car Wash Show, and you talked about KPIs. And and it was well received. And again, I think this is the kind of level the playing field. The data's got to get out, show you what good looks like. The bigger problem becomes is, okay, once we talk about getting churn down, right, or conversions up. So how do you do that? And that's where I think there needs to be probably, the first step is every owner's got to understand what good looks like. The next thing is, it becomes even a little more challenging, is how do you get good, right? And with all the technology, and we talk about AI, we start looking at saying the good news is there's a lot of data out there that we have as owners. The question is, what do we use? How do we use it? And how do we improve? How do we prove what we're doing to get to that next level?
Yeah, no, I completely agree. I mean, you can't manage what you can't measure, right? So I think first and foremost is having that appreciation for what the data means and understanding kind of what KPIs matter most and what those metrics are. But I mean, unfortunately, it's never a magic bullet, right? There's never a singular answer. It could be everything from pricing to how you go about training your teams to an effective promotional strategy. I mean, it's typically a mosaic of factors, but I think step number one is at least having the ability to jump off into a position where you could sift through the data of your business and find that right guidance and figure it out. But I mean, you're right. That's one thing to me that's just still just amazing, is the fundamental lack of understanding of what good looks like in car washing. And it's through virtually every dimension of the operation, whether it be how you manage your labor pool, how you go about pricing, how you go about selling plans, how you go about marketing and promotions, you name it, even to just your cost of goods, right? How much should you be paying in chemistry? You hit that right on the head. We've seen groups that are paying damn near close to $1, right, in chem costs, and it's just that they're unaware of everything from their vendor pricing and the contracts they're securing, but more importantly, how do you manage the application of chemistry in an efficient manner so that you're not losing in the tunnel, right? It's everything from timing to dialing up those hydrometers and all, making sure your nozzles are in good shape, and you name it. It is usually a mosaic of things to consider here. But again, having that fundamental understanding where you lie, that's, I think, one thing that we've been proud as an organization, is that we can provide some optics into a very opaque industry. Unfortunately, a lot of these data points aren't widely distributed or available to a lot of car wash operators.
Yeah, we're seeing a real evolution of technology coming in the marketplace. Recently I visited a car wash chain that has something that really, it was a pipe that literally went between its chemical and in water, and how it managed that, what was going on in a car, and it got its costs down significantly. There's a lot, and when you look at memberships, being able, the technology now to be able to interact with their customers and really understand, what will they be willing to pay for a car, right? How much will they pay for a wash? You get an extra buck a car, dropping that, it drops to the bottom line. And so there's a lot of unbelievably great advancements in technology and resources to improve someone's top line and bottom line. The problem I'm seeing, if I look at something, is when I go visit operators all over the country, they got their head down. They're running their company, and then there's a lot of misinformation put out there. So there's a lot of guys selling stuff, whether they're marketing it, whether it comes from an association. The question is, so how do you narrow it down to say what is really good and what is work? Because I don't really care. I don't want to measure just data. I want to measure what good is. And so how do we find good?
From a technology standpoint?
Yeah. How do we find good with things that are actually working and driving results?
Yeah, I mean, that's a really good point. I mean, you're being sold a lot of stuff, and I think a lot of groups out there, and they see money being allocated to a sector, they immediately circle the wagons and try to pitch in a bunch of interesting technologies and innovations that may not necessarily be worth it. That's a good point. I mean, I encourage every operator to have kind of their own diligence playbook and what questions to ask. I mean, first and foremost, referrals go a long way, right? Really understand, has this been used in other applications in car washing? And if so, give me the name of the operator so I can have that conversation. Because a lot of stuff, I mean, can sound good on paper, but when it comes time to reality, I mean, you got to really kick the tires on a lot of this stuff. There's no such thing as a free lunch, right? If you think it's going to significantly boost top line or better manage your bottom line, do the work to really understand the return on that investment and the efficacy of it. I think that's step one. step two is, as you're negotiating contracts with vendors and technology, always make sure you're giving yourself an out or some sort of trial period to actually test it, especially if you're making a significant shift to your operation, right? I think we're seeing some stuff centered around technology application, be able to better manage and monitor water usage and chemistry application. That's great, but make sure you're testing this out in a way in which you're not swapping out your chemistry across your entire operation or locking yourself into a 1-year commitment on the chem to get the technology with it. I think making sure you're negotiating good terms is also a very important piece of it. And then the third one is, does it really matter to you, right? We could talk about some really interesting stuff, but if it's at the end of the day, it's you're picking up pennies in front of the steamroller and it's not something that really matters to your business or the needs of your business today, don't even entertain it, right? I'll tell you firsthand, one thing that we've been struggling with in our car wash operations is we've had the privatization of a lot of our water utilities here in the Chicagoland market. And as a result of that, we've seen our water prices spike. And we've been fortunate enough for a lot of our sites that we're here in Cook County. We have abundance of water, just being our proximity to Lake Michigan. But once you have that privatization, now we're starting to think about, reclaiming how do we effectively manage and monitor our water controls. It was amazing to me once we started going down that, the path of exploration to say, okay, how can we better manage this? There's so much technology out there, right? So that to us, that mattered a lot, is figuring that out. On the other side of it, when it comes to chemistry, we have a really good kind of chem vendors here locally. The chem technicians, essentially an extension of our team. Sure, we could put some really interesting technologies to better watch, monitor, manage, and apply chemistry. But at the end of the day, wasn't as important to us because we felt that we had the wagon circled in terms of how that manifests in our operation here. So I think really boiling it down to what matters to your operation and then going on that search to find the technology instead of, the tail wagging the dog, if you will. And that's a wrap on this episode of Behind the Business. Thank you for joining us. If you want any additional information, please visit us at www.amplifycapgroup.com.